I wanted to take a moment and just welcome everyone to this grand time. Like I mentioned, I'm Anita, co-founder and CEO at The Grand, and I see some familiar faces and some new faces. For those of you who don't know us, The Grand is a group coaching platform and community to help leaders gain clarity, confidence, and connection. And a grand time is really a space for us to bring together friends and members of our community to share their wisdom more broadly. And I couldn't be more thrilled to have Charles Hudson here to join the conversation today. So Charles and we met back when I was working at First Round Capital, working on Angel Track, and Charles and I got to collaborate on sharing some of his insights with new angel investors. And that's when I first learned just how brilliant Charles is. And then we had an opportunity to work together as Charles became one of our first investors. And Charles, one thing I'd say to you about that, you were truly one of our first believers, and that meant everything. It completely can set you on a different trajectory. And early days as founders, it truly is everything. And I know that you've done that for a countless number of founders. And so I thank you for that. The other thing I would say is, one thing I admire about you is how you're able to really scale yourself and support your founders in a really meaningful way. It is one of your superpowers, and we're going to dive into that a little bit and talk about, how VCs should support their founders, especially in this economy and environment that we're in. So before we do that, I want to give you an official intro. We'll try to do you justice, but for those of you who don't know, Charles Hudson is managing partner at Precursor Ventures. He's also the board chair of the National Venture Capital Association. He also teaches at Stanford GSB, and before that was a partner at Uncork Capital, and previously was a founder himself, and just all around a good human. So thank you so much for being here, Charles.
Thanks for that, Anita. I actually remember walking down Market Street with you and Ray talking about what would become the Grand. So it's really cool to see how it's grown.
Yeah, I remember those days of just walking meetings. Well, to kick off, one thing we like to do at the Grand is we love rituals. And so one of the things we do is we like for people to introduce themselves in a way that you don't normally introduce yourself. And so my prompt to you is, what's a dimension of yourself that doesn't really make it in your usual story?
Wow. It's a good one. I would say one thing that I don't usually talk about in my intros is that I'm originally from Michigan and grew up there and still consider myself a Midwesterner at heart, and try to bring a lot of my Michigan sensibilities to the West Coast, even though I've been here for going on 26 years at this point. It still has a big influence on how I think about the world and how I think about people.
I love that. And as someone from the Midwest, I get that vibe. I'm here in Milwaukee, Wisconsin, where I grew up. Say more about that. What do you think the Midwestern sensibility is?
I think a lot of it is there's a certain humility about your work that at least I was taught growing up in the Midwest. I think there's a certain optimism and sort of benefit of the doubt that you give, a warmth about people that you don't know, and a sort of presumption that they're good, well-intentioned people. I think value of hard work, community, these are all things that I associate with my time as a Michigander.
Michigander. I didn't even know that's what you call yourself.
Michigander.
We're Wisconsinites, but I love that. And it really shows up in, again, the way that you treat your communities and especially your founders. And so I definitely see that, just that human first approach and just knowing that you can learn something from everyone and have that intent. So love that. Thank you for sharing.
Yeah.
And shout out to Joe. Yes. So now I want to shift gears and talk about just the founding of Precursor. Share a little bit more about your story and how you came to start this fund.
This is actually, it's a very timely conversation because my last full-time day at Uncork was April 1st, 2014.
Wow.
So it's actually almost 10 years to the day that I went out on my own. Starting a venture fund is kind of like starting a company, but just way slower.
Mhm.
And so I'd been at Uncork for about 5 years by the time I decided to move on. And I just had this idea that there were all of these founders I was meeting who didn't have much product traction, but also didn't have what I would describe as particularly strong relationships with VCs.
Mhm.
And I just noticed that you had to have one or the other. Either you had to know people socially and professionally, or you had to have a product that they could touch and feel. And if you didn't have both of those things or either of those things, it was really hard to raise money.
Mhm.
And I'd been a VC at a fund that had raised a couple funds. I knew some limited partners. And so I thought that I would be able to just go out on my own, talk to some people, raise some money. I'd seen a lot of other people do it.
Mhm.
And that was not really how it went. And this, let me tell you, just backing up, the construct of the fund when I started was it was going to be just me as a single GP.
Mhm.
And we were going to invest in about 50 companies per fund in this new thing called pre-seed. And at the
Mhm.
time in 2014, a lot of limited partners or people who invest in venture funds were like, I don't know what a pre-seed company is. And I just finished figuring out what seed is. And now you want me to learn something new. Aren't you only going to find the companies that aren't good enough to raise seed capital, adverse selection? There are just a host of things. It's too many companies for one person. It's too much work. You won't own enough. Every mean, every mean or sort of non-constructive thing that could be said about one's fund, I heard in the beginning. So it took about almost 2 years and 300 plus LP meetings to raise $15 million for our first fund. And
Wow.
it was really hard. A lot of people, I had one person who's a very good friend and I think was well-meaning. I pitched him on my fund at the end of the hour. He said, "Do you think it's too late to go and get your old job back?"
No.
Oh, and I think he meant it in that like grandfatherly, I'm worried about you way. That's not how it landed with me, but I think he was saying it from a place of like genuine concern and care. Um, it was there was just a ton of resistance. And I think a lot of it was because people couldn't conceive of in a world where there are thousands of venture capital funds that exist, how
Mhm.
could there be pockets of founders who are not well served? And as I reminded a lot of these limited partners, I said, most venture capitalists are pretty good about giving money to people that they know.
Exactly.
And venture capitalists don't know everybody. And particularly, there are certain communities where venture capitalists really don't know people outside the coast, women, people of color. Like there's just a lot of communities that are really on the outside looking in. And that was just like not consistent with what most people thought one should do if you wanted to build a successful venture capital firm. And I said, well, I have two choices. I can either give up and accept that what people are telling me is true, or I can get much better at telling our story and find a way to package and promote what we're doing in a way that's consistent with what other people think can be successful. And it really was figuring out, well, how do I tell our story in a way that's like authentic and honest, but also is consistent with what other people think can be successful.
Mhm.
Thankfully, we figured it out. I'm still here. We managed to raise 4 funds, but it was really just me. And I will say this, like sort of like being a solo founder, being a solo fund manager is really difficult
Mhm.
because you have to raise all the money for the fund, you have to run all the fund, all the stuff, payroll, hiring people, and you have to do the fun part of the job, which is investing in startups and supporting founders. And so we've come a long way. When I started for the first year and a half, it was just me. I didn't have anybody working at Precursor. Then I added an associate who's since gone on to start her own fund. And today we have 12 people. And the 12-person version of Precursor is much different than the 2-person or even 3-person version of our firm. And I don't know, like I learned so much about myself through our fundraise. I learned so much about our strategy. If I could go back in time and change a couple of things. One was, and this is, I think, true of all fundraising, people pick up on things where you're defensive. And people pick up on things where you don't have clarity. And so when people would ask me, do you have a partner? Do you have plans of a partner? I would give them this sort of 5-minute, very meandering answer. And
Yeah.
they'd be like, well, I don't know if I found the right person. And most people were just looking for a simple yes or no.
Mm.
And, there were some questions people had about, were some of the investors of our old fund going to support me again? And I had one person who pulled me aside and said, some of these things are designed to elicit short answers, like a yes or a no. These long-winded answers that you're giving are not serving you. They're like not helping you get to a yes. And so I wish I had thought more and gotten to more clarity on my own that like, hey, this is a single partner fund. That's a feature, not a bug. It's going to remain that way until it isn't. And that's something you have to buy into. And I just think I wasn't really prepared to deal with all of the sort of adversity and frankly, like the rejection that it takes to raise a fund. But, over time, I figured it out and got a lot of support from my own community. And now I'm really like proud of what we've built, and actually really proud that we've been able to stay sort of true to the original vision.
Yeah, no, thank you for walking us through that story, and we're so appreciative that you stayed true to that vision, and
Mhm.
happy anniversary.
No.
And I love what you said about had this, you could have given up, or you could have kept moving forward and gained that clarity of thought and sharpen the story around what you're doing. And I'm so glad you did, because you're on the forefront of, the type of investments that you make, and this thesis around, talent is universal, but opportunity is not.
Yeah.
Um, Looking back, like, you got more consistent in terms of the story that you told. Like, what else did you do to get people over the hump?
Um, I I don't think I've ever convinced somebody to invest in Precursor. I
Mhm.
think I've just found people whose mind was open to the possibility that this could work. And I think in the beginning, I sort of wanted everybody to agree with me. And there was, if I go back in time, I would say there was a lot of resistance to what I was doing. And I think my initial instinct to that resistance was to just push harder. It was
Mhm.
like, oh, they're resisting me. I'm just gonna like push harder. And anyone who's like done athletics or anything, like oftentimes the answer to resistance is not to push harder
Mhm.
in relationships and life. And I was just like, oh, instead of pushing harder, I need to like step back and understand like why am I encountering this resistance? And it's like the premise of our fund is contrary to what many people think is successful. Me being more forceful and trying to make the argument is unlikely to work. What else can I do? Well, I can try to find pockets of people who are at a minimum open to the idea that this could work and could be a good idea. And that really helped me a lot in my fundraise because it allowed me to step back and say, there will be people for whom this is just too much to believe. And
Mhm.
rather than trying to convince those people that they're wrong, I need to
Yeah.
find people. And that was like the big thing I pitched. I'll never forget. I pitched a big limited partner who has a very strong point of view that like the opposite of what I do is the right formula. You should invest in very few companies. Those
Mhm.
companies should only come through your network. You should be hyper involved in those companies and you should own as much of them as you possibly can. And I'll never forget, I was pitching him at the end of the pitch. He goes, so in order for me to say yes to your fund, I have to believe everything I believe is basically wrong. And I was like, oh, well, that wasn't my intention, but I realized I've like framed this for you in a way that like you're kind of right.
Yeah.
I haven't given you any space to sort of continue to believe what you believe, but also support me in my journey. And a lot of what I learned was like, how do you communicate an idea to people who are skeptical in a
Yeah.
way that doesn't force them to reject their beliefs, but create space for you to like bring them on your journey. And that was like not a skill I'd really had to exercise in other phases of my life. And it's probably one of the most useful things I've learned from starting my own fund is like, how do you navigate those conversations? And then the other thing is I found a way basically to make our fund feel differentiated. And this was the other problem we ran into. People said, there's thousands of early stage venture funds. All of you sound the same, smart person with a good network and a clever idea. What makes your clever idea different? And like one day I'd had a tough pitch and I was in New York City and I sat down with a little piece of paper and drew a little 2x2, which is like the core slide of our deck, which is, if you think about it, there's two dimensions. There's like, what do I know about this person and what do I know about this business? And I was like, most people are unwilling to invest in like I don't know much about the person or the business. And I started just showing this picture to LPs. And I'd be like, okay, like we all know the like, you know a lot about the business, you know a lot about the person, or there's a lot of signal. That's like YC repeat founders. We kind of know how to do that in venture. There's the person who doesn't have much traction, but is former colleague, classmate, neighbor, friend. Most people can see their way to invest in that person. There's what I call strangers with data. And I just started asking LPs, who do you know who's investing in people they don't know without data? And a lot of them were like, well, I would ask them, I was like, I'm trying to find this community of people, like, who are they? And they would say, I don't know. And I'd say, we can talk about whether or not this is a good idea second, but first let's figure out, they're like, yeah, no one's really in that quadrant. And I actually know why. They're like, that seems hard. I'm like, well, it is hard, but it's also different. And that was like a big unlock for me. It just created space to have a conversation about our strategy in a way that like wasn't as oppositional.
Yeah, no, I love that point. It's so counter to how people are wired, but it's what made you differentiated and is the essence and the core of what you do.
Yeah.
And the point, around finding your true believers versus convincing your true skeptics, that is so core, and something I thought a lot about in our fundraise too. There's some people are exactly your point. You're trying to convince them, and you realize, no, you need to go out and find the true believers. So I appreciate that. One of the things that you talked about this environment, mid 2023, you wrote this great article about just the economy we're in with higher interest rates. It's making VCs think harder about the returns for their LPs and which companies they should invest in. And you talked about this downward pressure, LPs putting pressure on the VCs that are in turn putting pressure on the companies. Reflecting on, we're at the end of Q1 2024, what are you seeing with the macro economy and how it's affecting founders and VCs right now?
I think 2022 and 2023 were eras where the amount of like negativity that VCs were experiencing about their own business was coloring two important decisions that we all make. What new companies should I back? And I think for most people, the answer was, the last thing I want to do is like take on new companies. And second, like, how do I think about and feel about the companies, where I'm already an investor? And I think for the last 2 years, there was a lot of negativity around both of those decisions, which is why I told someone, it didn't just feel like capital dried up. It actually did dry up for almost everything other than AI. Volume was way down, and I think sentiment was like pretty negative. Sometime around December last year, things really started to change. And when I say they started to change, it is not that they went back to the 2021 energy of like total optimism. I just think people needed time to process the investments they'd made, sort through their own portfolio, figure out what companies they were going to support. I think that work was done a long time ago, but I think this sort of sentiment, people getting back to feeling good about putting new money to work, that only really started happening at the end of last year. And I've been a venture capitalist off and on now for about 20 years. And I tell people, this reminds me a lot of the way people felt in 2003, 2004, after the internet bubble burst. It took a while for people to say there are good companies building on the internet. We just have to like accept that we might have made some mistakes in 99 and 2000. And some of those mistakes can be fixed, and some of them are just simply mistakes. And what I'm seeing is in our portfolio, the companies that have good businesses that have been capital efficient, that are going after venture scale outcomes, are able to raise money. And the ones who don't tick those boxes cannot raise. And to some way, like that's kind of how it's supposed to work. I think we kind of overdid it on the upside in 19 and 20 and 21. And we definitely overdid it to the downside for the last 2 years. And I feel like we're back in this kind of like harmony to some extent. But for founders, it feels awful. It feels like the world's worst whiplash. You went from like the enthusiasm of 20 and 21 to the just doldrums of pessimism for 2 years, and now to something in between. So I spend a lot of my time trying to help founders answer a question that's hard to do, which is, what does a new investor think about your business? And it's so hard to be objective about your own company or even understand how an outside investor would look at your company. So most of the conversations I have with founders today are, let's talk about your business through the lens of like what's working and what isn't. And are you actually answering the questions that people care about today?
Mm. That's super helpful, just to be able to sit down and, talk about this market correction that's happened, but also motivate your founders in a way that, times have changed. People are more positive about the outlook. And so, you play a really critical point there. Beyond the financial support that you obviously give your companies, what else are you doing in this economy to support your founders? And
Well,
again,
I mean,
I want this through the lens of, you as a solo GP, like, how do you do it? How do you scale yourself? And
I have a, I mean, first of all, the grant is an important part of our founder support system. It's funny, I just talked to somebody. I don't think I've told you this. For our last intake, we had one of our founders who's a repeat founder came
Mhm.
to me and said, I'm not sure this is for me.
Mm,
Like, I've kind of done some of what this sounds like before, and like, yeah, I don't know. I said, well, just can you do me a favor? Can you go to the intake? Because I actually want to hear from you whether this is valuable. Because if it doesn't resonate with you, that's good feedback for me to know
yeah.
that as we work with repeat founders, I should think of them differently. And he went in, I would say, like slightly skeptical.
Yeah.
And we had our check-in yesterday, and he goes, I'm glad you pushed me to do the grant. It was awesome. And he goes, I've had a subsequent follow-on session with Jeanette to talk about like interpersonal communication, and he was like the person I was like, you're the person whose feedback I wanted the most, because you were the one who went in with the most questions. And he's like, he's like, I've already gotten so much out of it. If nothing else happens, like it's already been worth it. So
Yeah.
that is that literally happened yesterday during our one-on-one. I think I think this is probably a longer answer than you asked for, Anita,
Go.
but if you'll
Yeah.
indulge me,
Yeah.
I think when I started the fund, all these LPs would ask me, well, how are you going to help all of these founders? And I think their notion was the founders that we work with needed me to come in and do stuff in their company,
Mhm.
which is absolutely not true. No one needs me to come in and write a product requirements document. God forbid I touch code, design. Like, they don't need that. What I've come to realize is most of the founders I work with need a couple of things. They need somebody who can help them remain accountable to their vision and like
Mm,
hold up a mirror sometimes and say, this is what you told me you wanted to build. This is what you told me you wanted to achieve. Let's look in the mirror together. I think sometimes founders need connections to resources, introductions, but I've come to believe the thing founders that I work with need most is community.
mm,
And like, it's my job to facilitate that, not to be that, if that makes sense. And so I spend a lot of time figuring out how can I, probably the most humbling thing is half the things people bring me as questions as a VC. I'm like, like I could answer that. I could also just put you in conversation with another founder. Like last night, I talked to somebody who's going through a very difficult co-founder. It's going to end up as a breakup. And he's like, what advice do you have? I said, well, I can give you like my general view on this. I've seen probably 100 of these at this point in my career. I said, but I think what you really should do is, if you'll give me a minute, I'm going to text two other founders who went through this 6 months ago. They're kind of on the other side. And I think what would be more valuable for you is to actually talk to them. They can tell you what they did, what they wish they'd done differently, how they talked to their team about it, what went well. I think what you really are searching for, it sounds like to me, are more tactical answers than I can give you. And so I think my poor assistant today was like, your calendar is crazy. Like, what is going on? All of these founders have like asked to kind of skip the line and they don't want to wait to the, I said, people right now are under a lot of stress.
mhm.
And I feel fortunate that they feel like talking to me can help them address that stress. But I think my job is to be available. And I think availability is a big part of being a VC. And I think part of my job is to try to help connect people with the resources that they need when they get stuck. And I don't have to be the answer. It's
Mhm.
totally fine if I'm like, I actually am not the person to help you with this issue. The right person to help you is somebody else on my network or another founder, or let's brainstorm together who we could put you in touch with. That would be like a valuable connection.
Mhm. Yeah, I love that focus on community. And what we think a lot about at the Grand is how can we get people the right person on the right topic at the right time,
Yeah.
and bring people together who've been there before. And I also love what you said about you're not coming in and giving advice and fixing someone's problem. A lot of our coaching philosophy at the Grand is really empowering people to find their own answers through additional perspectives, through guidance from a coach. But really, I think about my own Grand Council journey with founders. It was just this safe space where I can let out a sigh of relief of, okay,
Yeah.
you all really get it. And it helped me build self-trust and emotional resilience, because inevitably, like really high highs, really low lows, and just managing that journey is so critical.
Yeah. I mean, a lot of, I build a little coaching plan for every founder of my own, which is like based on what I know about this person, what are the areas that I think we should probably focus on? Sometimes it's like, this person's really strong at this. I want them to like leave the time where they work with Precursor feeling even more confident in this strength area. And these are maybe some development areas that like we should probably try to work on in our time together, so that because people graduate from working with Precursor. Like we're very focused on 0 to 1 graduate from spending a ton of time with me, but I want to sort of help them leave in a better state than they were when we started working together. And so I have a little coaching plan for everybody, and like oftentimes it is around the things that come up in the Grand.
Mm, I love that. Could you share a little bit more about some of the outcomes? Obviously you believe in this. You've had your own personal experience with coaching and peer groups. When you think about some of the outcomes and how it helps you from the vantage point as a VC with your investments, what are some of the things that have come up for your founders and having that
Yeah,
trans?
I guess I've always believed that founders are like the secret magic ingredient to startups. And I have this view that like all startups are these like amplification devices for the idiosyncrasies of the people who run them. And
Mm,
so whatever you have inside of you, it will show up 10x at your startup, including my own venture fund. And so part of what I want to do is, if I can help people become more aware of their own tendencies, who they are as a person, they will, I think, better understand sometimes some of the like behaviors and tendencies and culture that's developing in their startup. And they will have a better understanding of like, well, where's that coming from? And I find a lot of the founders I work with, they've never really done anything that's kind of self-reflective to the level that you need to be to understand like who you are.
mhm,
And so I try to work with them to start them on that journey. And I think the Grand is like a big part of that. I also just think so much of what I'm trying to help people do is to become better leaders. And everybody starts in a different place. So I would say a lot of the outcomes I've seen have been spontaneous admissions by people in our portfolio. Like they're like, oh, I can't tell you who's on my Grand Council, but I had this issue and I took it to my group. And I feel like that's how I got through it. That's the reason I keep doing the Grand, is because the founders in our portfolio will tell me specific situations. Oftentimes it comes down to a couple of things. I didn't realize that when I was presenting or talking to people about subject X in this way, that the way I thought I was communicating is very different than the way they were receiving it.
mm,
Or I didn't realize that like the reason I'm having so much conflict with this person in my organization is that like we have different beliefs and values about this subject or topic. And there's these sort of epiphanies that they'll tell me about, where they're like, I was stuck on this issue and I only could view it through one lens. And like by being in conversation with the group, I was able to shift my perspective and sort of see the root cause of the issue through a different lens and like better understand. And I'm just like watching people have these little breakthroughs. And I think it's so hard, especially for first-time founders, when you don't have like that well of previous experience to draw on, and maybe none of your friends or family are founders, maybe your spouse or partner is not a founder, it can be hard to talk about like the things you're trying to solve. And because everyone's like, I don't have that problem. Never solved it, never seen it, can't relate to why it feels so weighty to you. And I think that's really a thing. I've like come to see that we've made over 400 investments now at Precursor, and there are definitely some themes.
Yeah, the point around that different perspective. So like you mentioned before, when you're talking to a founder one-on-one, maybe you're able to act as a mirror and reflect back, their vision, like you said, and help them stay accountable. But with the group, it's almost like a kaleidoscope where they're getting so many different perspectives and different ways to think about their problems, and as a result, be able to make a better decision faster, or use the group as almost, we call it a coaching lab, where you can practice a hard conversation or get feedback on how you're showing up, and then feel more equipped to do that in the real world. Because a lot of times we don't have the gift of that. We don't have a group of, 6 to 8 people to share that with us. And you could be so alone and just spitting in your head and not have time to come up for air to have those conversations.
I mean, the other thing I've told a bunch of my peers is like, I don't care how nice of a VC you are. I think I'm pretty nice. There's always a power dynamic between you and the founders because you gave them money. And it's not that they work for you, but you've invested in their company. And no matter how much they like you and trust you, there will always be certain conversations that are probably not appropriate for them to have with you first. And I think I'm like a big believer that you have to give founders, even if they like you and trust you, you have to give them space to like get those problems and issues resolved without you. And like, I think this is one of the things as an industry we've like missed. All this talk about being founder friendly and being nice. It's all true. You should do all those things, but you should also acknowledge that like the power dynamic is real. And there will be moments where at best, the two people can acknowledge that it exists and still discuss the issue. At worst, it becomes a blocker to having an important conversation. And I think to pretend that that doesn't exist is like silly and counterproductive. And so I'm a big believer that like, I don't expect every founder to bring me everything all the time. I want them to have a space where I don't exist. I'm not present. I can't see what's happening, where they can workshop things, they can express things that are like thoughts in process, share things that they're not sure they want to share with me. And I do think those spaces are really important for founders.
Yeah, I appreciate you naming that and creating that space for your founders, because you're absolutely right. Even though you want to be everyone's first call when things are going well and things are going bad, there's some of those pre-conversations and a safe space where they need to untangle some of what they're going through. So I appreciate that. As the founders that you support are experiencing rapid growth, could be really hard to maintain that connected culture. In your experience, when you're talking to those founders, what are the best founders doing to really support their teams as they're experiencing this type of growth?
I think a lot of them tend to think about some level of coaching, learning development as they get larger. I think the bigger thing I try to teach founders, and the best ones I think intuitively get this, which is like the culture that worked for your company at 4 people is probably different than the company that works at 20. And it doesn't mean you have to abandon your values, but like your rituals and practices need to change as your company gets bigger, because you can't just get everybody in a conference room. You're not all working in the same open office where everybody can hear everything. Not everybody remembers the product review meeting from 2 years ago. And a lot of what I find is when people come to me and like the culture feels off, I'm like, well, let's look at what the company looks like today. Are you still trying to run the company using the management tools that worked when it was a quarter of the size. And they're so busy running and operating that they don't think, oh yeah, like this company is a lot different. So a lot of what I try to do is when I get an inkling that that's coming, I will put them in contact with somebody who's usually a stage or a stage and a half ahead of them in company development. Because again, going back to our previous theme, like oftentimes those people can say, let me guess, these are the things that you're observing in your company. The person's like, how do you know? Like, because I had the same thing in my company 18 months ago. And like, and I try to give people like more than one story. I'm like, let me give you a handful of people who've navigated this so that like you get a variety of perspectives on how you can push through this. But I do think I also tell them like at some point you're gonna have to like educate other leaders in your company to be able to like deliver these messages for you, because increasingly there will be layers of people between you and individual contributors, and you have to figure out how to create these like cultural ambassadors, but also you have to figure out how to create space for people in your company to do the kind of thing you're doing with me, which is to learn and grow and like share. And so a lot of them will look at things like the Grand. They will look at like creating ERGs or affinity groups. But a lot of what I tell them is like, do we have the right management practices in place given the size of our company?
Yeah, that makes a lot of sense. And you personally, you were a founder yourself and experienced this firsthand. And even with Precursor, going from 1 to 12 now, like what are the things that you've personally experienced?
Oh,
Maybe.
like I am now the only person in our San Francisco office every day. And one day I realized either everybody's gonna have to come to me or I'm gonna have to start getting on the road a bit more to see some of my teammates. So now like I have 3 people in LA. I now go down to LA. I'm starting this month, go down to LA once or twice a month just to co-work with my teammates. I had this really it's not designed to be like, oh, you're getting a review or we're doing extended. It's really just to kind of co-work with them. And instead of asking the 3 of them to come up here, I'm just gonna go down there and like meet them on their terms in their space and like be a part of like their life down there. And I do the same thing for my teammate in New York. And that was like but that only came up because one day I had a lunch in LA and my team was like, this was really fun. It was like great to have you down here. I was like, yeah, but I'm the bot, whatever. Like, they're like, no, like it was actually really nice to have you come down here and hang out and like experience what we experience every day. And it made me realize that like that would be a good culture reinforcing message and way for me to get to know them better, to come down there and spend time with them as opposed to always having them come meet me at HQ. We also do a quarterly retreat and we've had you all come in and facilitate sessions before as part of those. And we always try to do something fun as a group. We've done an online escape room, which I highly recommend if anyone.
Such a fan. I do.
So fun.
So fun.
So fun. So surprised, like biggest surprisingly fun thing I've done in a long time. We've done sushi making. We also sometimes we'll have somebody on our team teach everybody else how to do something. So we had someone on our team who taught us how to make homemade biscuits. Like that was pretty fun. I feel like I have to work a lot harder as a leader to make this connective tissue work because our team's distributed. And it's not just my relationship with each person, it's this web of relationships. And how do I make sure that like everybody feels connected, not just me feeling connected to each individual?
Yeah, it sounds like you've brought in a lot of intentionality into that and not just assuming, hey, everyone's going to come to me. How do I meet people where they're at and give them the support that they need to really amplify that connective tissue.
Yeah.
I want to open up for the audience to ask them questions. I have a couple more, but curious if anyone wants to dive in and ask Charles some of your own questions.
Yeah, I have one that goes back to something you said in the very first question when you were raising your fund and talking about how a lot of the LPs were saying, oh, this strategy sounds like it will cause adverse selection. And I've seen a lot of things on social media talk about, we don't believe in value add, VC value add or platform teams or support because it selects for worse founders, or it makes you less aligned with founders. So I'm curious if from the perspective of, as an investor, how does all this support and how does all the support you give to founders kind of tie into your work as an investor and having to drive those outcomes?
It's kind of funny, Claire. In the beginning, this was a moot issue. We just simply couldn't afford platform services, so it was kind of moot. And then, I actually went and spent a day. I don't even know if you know this, I went and spent a day with the first round platform team
Oh,
and just asked them, like, what do you all do? Like, how does this all work? And my conclusion was, this is a very significant financial and operational investment if you want it to be done well. So my general view is like, you should either do platform services very well or not at all. The intermediate outcome is actually worse than doing nothing. And there's all these other challenges, like how do you have one talent partner, how do you ration one talent partner across a whole portfolio? And I would say the self-serving thing is you put that talent partner on your best company and have them. And I'll never forget, I met somebody who was a talent partner at a big firm that was an early investor in Airbnb. And the person said, I think if I can hire this one person for Airbnb, it could create $10 to $100 million in enterprise value for the company. So I'm spending all of my time on this one I was like, wow. Okay, so I don't know. I have a whole bunch of theories that it's less about adverse selection for founders. It's more that it's hard to satisfy people with a platform team because inevitably there'll be people who want to consume resources from the platform team and they won't get them. And I've always felt like I don't want to create disappointment in our founder community. I also think there's a whole bunch of things that I think founders just have to learn how to do. And I'm pretty direct about that. I'm like, I would love to help you hire, but that's not a substitute for you learning how to attract talent to your company. Because if you're a founder, you are going to be sourcing, selling, and closing talent for the rest of your life. That is just like a core skill. And if you don't learn it now, I don't know when you're going to learn it. So what I tell people is instead of having this huge sourcing operation for you, I will help you close anybody that's close. Or I'll give you a second set of eyes on a candidate if you're not sure that the person's the right fit. And I probably do 1 or 2 of those a week across the portfolio. So I'm very much like the teach a person to fish. There's a bunch of things you just have to learn how to do. And even if you're not good at them, practice will make you better. And you don't have to become the best, but you have to get above the minimum bar to be a successful founder. And I kind of think in some ways, platforms done wrong can rob founders of that learning opportunity.
I invest at Techstars Detroit, so we invest in pre-seed companies. And one area that I'm trying to improve as an investor is actually what you just mentioned, sort of this directness with founders. And so what's your approach to giving founders feedback and having those difficult conversations, especially when you're dealing with founders who have high egos and also very opinionated and want to you generally want the best for them, and want it to approach in a way that's actually helpful and not I guess diminish the relationship in any way.
Yeah, I have, this is probably the area where I've spent the most time in the last 3 years. I have somebody that I work with who helps me think through a lot of things at Precursor. There's sort of 2 principles I operate by. One is I want the best for people in the long term, which means I have a fairly high tolerance for short-term conflict in service of the long term. And second, you cannot have difficult, at least I can't have difficult conversations with people without a base layer of trust. So I'm like, okay, so step 1 is I need to build trust with these founders well before I need it. Which is why I try to have a regular cadence of meeting with people in the beginning, because I don't know most of the people I invest in. By the construct of our fund is I don't know most of them. So I have to get to know them. And I have to create the conditions under which they believe that I care about them. Because I do. And that they believe that I have their best interests at heart. And that anything that I tell them, whether it's positive or negative, will be coming from a place of wanting them to be better and wanting them to be successful. That doesn't happen the day you wire. So you need to like get to at least I do. I shouldn't say you, Tetra. I need to get to a place where I feel like we have a baseline layer of trust and understanding between each other that I now have like the possibility of sharing some tough feedback with somebody if I need to, also with their permission. And so sometimes I'll ask people like, I have something to say. I'm not really sure like this is the right environment. Are you in a place where I could share something with you that I'm not sure how this is going to land for you? Sometimes people say, not really, not today. I'm like, okay, cool. It's good to know. And second, you know, like I've told a bunch of people in the last year, we're not going to invest in your next round. That stings when you hear it. There's like no getting right. It's not good. I can't dress that up as if it's an opportunity. It's bad news. But it's bad news delivered honestly. And what I found is that when we have trust up front and you deliver a tough message in a way that's like you don't want to sell your company stinks, that's why I'm not giving you money. That's like, no, you're just like, hey, like for a bunch of reasons, we're not giving you money. I find that you can move through the awkward, difficult part of that conversation and come out the other side, as long as you're willing to accept this person might be mad at me for a month because I'm not doing their round. But on the other side, you can move forward. Every time I have not had those two conditions, it's been kind of a disaster. It's either been like, I told somebody something they weren't ready to hear. I told somebody something that they didn't feel like I had permission to say to them. Like the relationship like wasn't supportive of that level of honesty, or we didn't recover from it because like it was too much too soon. So the hard thing is sometimes there's things I really want to tell founders and I'm like, we're just not ready to have that. Like, I'm not ready to have that conversation with them. I don't think they're ready to have that conversation with me. So I'm gonna like sit on this for a little while and see if it still feels as urgent the next time we talk. It's taken a lot of practice. I still have plenty of room to improve, but it's taken a lot of practice.
Thank you.
And Ray's tool is the tool Ray put in there is very useful. It's super useful. I actually share it with a lot of founders who are doing like difficult conversations for the first time.
There was an article that came out on Crunchbase a few weeks ago, I think, where Index Ventures tracked a couple, I think around 200 startups, starting from zero and then all the way to their first 1,000 employees. And I think they found that the number one questions that founders tend to ask is really around people, like who should I hire? And then after that, how do I scale the culture? I'm curious, given you spend a lot of time also with founders at this stage, if that resonates with you and rings true of your experience or what you might add to that.
I think eventually every founder I work with realizes that hiring is the single most important and highest and best use of their time. They all come to it clear from different places. Some people like intuitively get it right away. Other people want to spend all their time on product or want to spend all their time on sales or want to spend all their time on whatever their superpower is. And eventually they realize the company will not grow or scale unless they find the best people. And the best people for their culture and the best people for their stage. And the very best founders in our portfolio are always asking, like, do I have the right people in the right place, given where we are with the company? And if no, how do I find them? The best founders in our portfolio are always recruiting. And sometimes it's just passive. It's just like they're constantly meeting new people who could someday be like, it's funny. I just talked to somebody last week where they hired a VP of marketing and I met this person 2 years ago. And 2 years ago, they met this person. They're like, look, this person is not at all stage appropriate for where our company is. But this is someone, and like they've sort of kept the relationship. And this person's been kind of an informal marketing advisor for the company. Now it's VP of marketing. And that founder like started that relationship 2 years. And this person has probably 20 of these people that they're talking to in various future roles, partially for advice, but also partially to get to know these people and figure out, are these the right people to add to our company at some point in the future? But I think this founder probably spends 10% of her time every week cultivating and nurturing these relationships. And it has really paid off for her. But it's one of those things where like you have to be committed to doing it consistently for a long time. Also, we have so much founder turnover. And one of my LPs always asks me, what do you do if you don't like both of the founders, or all three of them? I'm like, I try to be very clear. which of these people am I really underwriting? In the case of the Grand, it was easy. I would like have very good feeling about both of the founders, but I have some companies where I look at the cap table and I'm like, one of these people is central. And if that person left, I'd be very concerned about the future of the company. And if their co-founder were to leave, it would be sad, but I wouldn't be as worried about, like, it wouldn't feel as existential. And that was like not a popular view. When we started telling people that 6 or 8 years ago, a lot of it's the whole founding team. I'm like, yeah, it is. But like, I mean, the other thing is that the article talks about too is most of the churn we see in co-founders is actually the technical people. Because if you think about it, you only have 2 choices. You can either be the most technical person in the company and be the CTO, or you can lead the engineering function as a kind of process management systems person. If you can't do one of those 2 things as the technical founder, it's really hard to scale with the company.
Yeah, a quick follow-up. I'm curious if you've noticed at what point founders tend to start to realize, oh no, maybe the problem is not like my sales strategy or my product strategy. It's the people.
Not
Not
as
if
soon as
people
I
are
would
being a
like.
problem, but yeah.
You know, oftentimes what happens is you'll have some function where you just can't find the right person. So we have a company that's on their 4th VP of marketing. And I was like, we've hired 4 really awesome people in marketing. None of them have stuck or worked. We should probably like take a step back and like try to figure out, why is this role so hard for us to fill? And is there something about the product or the company's culture or the level of resources that we're applying to marketing that's making it very difficult for people to succeed in this role? And like, upon further inspection, like there's some company issues that need to be addressed in order to have a marketing person succeed. And we don't have those resources at the company right now. So it's been really interesting. But I also feel like things only change when founders believe that they have the answer to like the root cause of the problem. Like me as a VC, knowing it doesn't actually do anything unless I can like communicate that to the founders in a way that it causes them to take action.
Charles. We have a question in the chat, and then Chacho, if we have time, I'll come back to you. So Anmol, do you want to come off mute or you want me to read the question? All right, I'll go ahead and read it. So what traits should founders identify in their initial business partner that make for the best team fit?
Oh man.
Easy one.
I always ask people like, there's actually some like really practical stuff. I always ask people like, does the outcome of this company matter as much to both of you? And I've had some cases where like for one person, it was like their life's work. And for the other person, it was like kind of just like, it wasn't as deeply meaningful. I've had other cases where one of the founders was just a lot wealthier than their co-founder. And the like economic outcome wasn't as critical to their quality of life, psychic well-being. I had one case where like one person had already had a big win and the other person was like still looking for their big win. And like, it wasn't as much about the money, it was about the psychic need. And so like, I always ask people like, make sure you all are like similarly situated and like have this like want/need the same thing out of the company. And then a lot of it is like values stuff. Do you value the same things? And the third thing is like, have you spent enough time together and like thought about your own communication? Like my co-founder and I used to do every Friday, we would go out and have drinks. And for the first 10 minutes, I'd say, what did I do that annoyed you this week? And I would do the same thing. And then we'd spend the next 40 minutes talking on like, well, what do we want to do better as a pair next week? But I was like, I think it's really important to just give him a weekly escape valve to just say like, just stop doing that. Just like, stop doing that. And there were lots of things I did. I didn't realize that annoyed you. He was like, we were busy. We were in the middle of like a product review, but like, and so like, we just figured out that it was better to have this sort of regular pressure release thing away from our team, just the 2 of us on a regular basis. And we just agreed, like, we're just not gonna fight in front of our, like, we had just a bunch of like values and agreements between the two of us, kind of like in any relationship. And like, we're just gonna abide by these because we think this will make the best company.